Hello, and welcome to Virtual Investor Conferences. My name is John Viglotti. On behalf of OTC Markets, we're very pleased you joined us for the Clean Energy Metals Conference. Our next presentation is from Horizon Copper. Please note you can submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome our next presenter, Irfan Kazemi. He's the President and Chief Executive Officer of Horizon Copper, which trades on the OTCQX Best Market under the symbol HNCUF and on the TSXV under the symbol HCU. Welcome back, Irfan.
Great, thanks so much, and thanks for the introduction. And for all of you listening in, recognize we're going to be heading in the next day or two to a long weekend, and appreciate you taking the time and learning a little bit more about all the various companies that are presenting at the conference. As John mentioned, my name is Irfan Kazemi, CEO of Horizon Copper, and I'm really excited to tell you a little bit about ourselves. We're a new copper company that not many people know about, mainly because we recently launched in the last year or so, and we're just getting our name out there, our story, our unique business proposition, and why we think that if we're right, there's some great returns to be made for investors. Now, as you'd expect, a lot of the things that I'm saying are forward-looking statements, and you should be cognizant that they're be aware of the cautionary language associated with those statements. But I think when you kind of look back, kind of high level of how I would describe Horizon Copper is we're this unique copper story that's looking to acquire interest in copper assets all over the world. And we're building out this portfolio, a portfolio that will provide diversification, not just in terms of asset, but jurisdiction. And our plan over the next decade is to become the premier mid-tier copper company going forward. And we want to do that because we believe that there's a copper deficit coming for the world to meet its energy transition requirements, for the advances being made in AI, for all the things that you're seeing about the importance of electricity. Copper is going to play a significant role. And so as we accumulate all these assets in our portfolio, we want to give investors the investment opportunity of having outsized returns, hopefully, if our thesis plans out. And so what's unique to Horizon Copper is the fact that we're not just a brand new copper story, but we're also a unique copper story where we've launched it with world-class assets in the portfolio. And these aren't just operating positions, but these are positions that we have that we're adding into the portfolio that are more passive. They're small interests in large mines. And so, for example, we've got some interest in some of the highest quality, largest mines in the world. Antamina is one of our key assets. They're our most material assets. We have a 1.66% NPI interest on the third largest copper mine in the world. When you look at our next asset in our portfolio, it's going to be on the fourth largest copper mine in the world, and so on. And so not only do you have Horizon as a unique copper story that's acquiring all these, interests in these great quality assets, but we're also partnering with some of the largest mining companies in the world. And so you've got a portfolio of really high quality assets with good operators. And then the third component that's unique to our story is the fact that we have a lot of torque and leverage to the copper price. And so if our thesis pans out, you can get not only the returns associated with copper prices going up, but also you get tremendous torque based on how we've created the company through our enterprise value. And I'll touch on that a little bit later of how we were able to do that. And then the last component in our unique story is not only good assets run by good operators and unique torque and leverage to the commodity price, but we also have a strategic partner that owns 30% of our company that is helping us finance a lot of these acquisitions in return for us selling some of the precious metals associated with these projects. So that's a very high level of who we are. We're a company that's actually cash flowing today. We have our most material asset, Antamina, that is cash flowing, millions of dollars on a quarterly basis to us, based on commodity prices that are near spar right now. That should cash flow over $10 million to us US on an annual average basis over the life of this asset. And this is an asset we think will be cash flowing for many, many years to come. In fact, they recently came out and extended the mine life to 2036, and we hope that that'll continue, and we expect that to continue going forward. Oyu Tolgoi, that's the second interest that we have. That asset's actually in not only a position of being constructed, but it's actually producing right now. The part that it's being produced on doesn't come onto our ground until probably end of this year when it gets to development, or and then it actually starts cash flowing on that actual ground for in a couple of years' time. But this is an asset we think will be cash flowing for many, many years again to come. When you look at the actual quality of the asset, this is going to be the fourth largest copper mine in the world. It's run by Rio Tinto, one of the largest companies, mining companies in the world, and it's through our 24% ownership of Entrée Resources. Ourselves and Rio Tinto, the operator of that asset, are the two major shareholders of that vehicle. And then the third asset that we have in our portfolio, this is a truly world-class asset, hot modern. It has a number of its key permits. It is one PDAC discovery of the year because of its high grade in terms of gold and copper, and is truly an outlier in terms of the quality of the asset. The operator of that asset is dealing with some issues in terms of its other assets in its portfolio, and so we anticipate that this, while it has a number of its key permits in place, it won't actually be producing for a few years out. And so this is more of our long-dated asset and probably our least material asset in our portfolio. But when it does start cash flowing, we think it'll cash flow quite a significant amount to us. And so, I think it's really important to look at the quality of the assets in your portfolio when you look at allocating capital to mining companies. Hot Modern, Antamina, and Oyu Tolgoi really are outliers. And so when I use the term world-class, when it's actually up and operating, which Antamina is, Oyu Tolgoi, when it gets onto our portion of the ground, it's got some of the lowest, total cash costs of a number of mines out in the world. It's in the first quartile. And so we're really excited to have that as kind of the foundational basis of our company, because we think it's really important to have that basis. So as you expand, as you add more assets to the portfolio, you have this kind of solid basis in order to grow and move your portfolio forward. So our most material asset, Antamina, this is, again, third largest copper mine in the world. It's run by Teck, BHP, Glencore, Mitsubishi. It's kind of conglomerate of very many companies that help operate it and run it. And most recently, in this last 6 months, they've gotten approval for a modified EIA to invest over the course of 8 years, $2 billion, to continue to improvements on mine optimization. And so they expanded the mine life from a couple of years from now to 2036. So you're looking at an asset that will cash flow for the next 12 years, and they're actually in the process of expanding that again and again. And so truly, we think this is going to be an asset that cash flows for many decades. And I think what's interesting with respect to this modified EIA and the information that came out is the fact that they are actually looking at throughput expansions with respect to this asset. So that's a possibility of increasing the tons per day, and as a result of increasing those tons per day, that directly impacts the amount of cash flow we would get, and it increases that cash flow that we get on an annual basis. So we're looking forward to seeing that materialize over the many years, and not only have this cornerstone asset continue to cash flow for us, but also increase those cash flows independent of copper prices going up. We're really excited to have that in our portfolio, and we think it's a very unique, wonderful asset to build our company from. The second asset in our portfolio is on the Hugo North Extension. This ore body is traditionally called the Oyu Tolgoi ground in Mongolia. The kind of like shaded area in blue is the part that is what you consider Oyu Tolgoi, and the shaded blue area is not the part that we have our interest. The darker area where you've seen the orange and the green, that's where our interest lies. And so this is an asset that they've done the drawbells, the capex associated with the underground mine has been expended considerably over the last 18 months. And so now you're in a situation where Rio Tinto, the operator of that asset, believes that they'll get into more development ore. So that kind of orange area that's on that slide towards the end of this year. And so I think when you look at kind of an operating asset, you have to look at, okay, what is the likelihood of an asset getting its key permits? What is the likelihood of the capex and the cost associated with building the mine? And then once you built it, what is the actual risk associated with it operating under its metrics that it was previously expected to perform under? And so Antamina, all those issues gone because build, operating, cash flowing today. Oyu Tolgoi, a couple key things have happened. One is they've expended a bunch of that capital. Obviously, they have their permits to move forward with it, but now they're slowly moving into the development ore. So a lot of those risks in my mind have moved to the wayside. So to me, it's more of a function of time before they come onto that ground. And when it starts cash flowing, we believe it'll cash flow for many, many years to come. And as Rio Tinto starts putting out more press releases associated with its drilling campaign, we're going to eventually see some of the first drill results that have coming out in the last decade. And the ones that have come out recently have been, I think, pretty fantastic. And then the last asset in our portfolio, our least material asset, is Hot Maden. This is an asset that's located in Turkey. This, I think, slide kind of puts together, when you look at the X and Y axis, why we think it's just a truly outlier mine. You've got an asset that is an outlier in terms of gold grade, so it's very high grade in terms of gold, close to 9 grams per gold ton. And that, if you know anything about mining, is just pretty phenomenal. But then also on the copper side, it's an outlier in terms of copper grade to closer to 1.5% copper. And so, and it's all really, as you can see, based on the ore body, just very kind of like a cereal box shape. So we believe that it allows for efficient mining and simplicity in operation. Now, having said that, the operator of that asset, SSR Mining, they had an incident happen at one of their assets in Turkey. That's taken a lot of their focus and effort from moving Hot Maden forward right now, and so they're working on remediation and stuff associated with that other asset. And so they publicly came out and said they believe commercial production would be in 2027, and we believe that there's going to be a significant delay to that. And then so we believe that this is going to be an asset that will eventually get into cash flowing, but it's going to be more long dated in terms of when it actually goes into our portfolio and starts actually hitting our income statement. They are planning to put out a technical report over the next 6 months. So the last technical report was a few years ago, and so we're interested to see what that technical report looks like, the optimization, but also the capex associated with it, and how inflation has played a portion in those costs going forward. So this would be our 30% interest that we hold in that asset. And the plan to finance that from SSR's guidance is about 65 to 70% debt to equity financing at the project level. And so as more information comes out on that progress, we'll pass it on to the market as well. So what are the key catalysts over the next 9 months? I think Antamina, more news coming out on a throughput expansion, more discussion on extending the reserve life beyond 2036. Oyu Tolgoi, I think over the next 9 months, you're going to see more news come out of the drilling from that asset and how it's progressing, the development ore towards the end of this year, and then also the fact that this asset is in our portfolio, and for many years, people would think of the Hugo North extension of being a decade plus away in terms of cash flowing. Now that we get closer to their movement in the development of the underground mine, the drawbells, and all the capital that Rio Tinto has expended, when you look at that asset, when Rio Tinto says they plan on actually hitting production in 2027, those years certainly start coming a lot closer, and the market will start paying attention more into that. And then Hot Maden, I think final investment decision towards the end of this year, technical report, and information on project financing will be important for that asset going forward. And so when you look at this story, I'm numbers guy by background. I spent over a decade as CFO of a multi-billion-dollar mining royalty company, and numbers are really important to me. And at the end of the day, what's critical is what are the cash flows that are going back to shareholders. And this slide just shows you our cash flow profile in terms of what is the attributable cash flow to Horizon shareholders based on various commodity prices. So you can see in 2025, closer to spot prices right now, what would be cash flowing. This is all in US dollars, and this is attributable to Horizon shareholders, net of any streams or royalties that we've used to finance our acquisitions via the Sandstorm strategic partner that we have. And you can see that you're going to be cash flowing based on our existing portfolio today. In 2025, you're closer to between 10 and 20 million US. In 2028, you're getting close to at spot prices close to 30 million. And then in 2032, you can see crossing, getting closer to $50 million US. And if you believe in commodity prices increasing, which I believe, especially when it comes to copper, you can very much see a scenario that you can be cash flowing multiples of your market cap on an annual basis, just based on your existing portfolio today. And so I think that's quite compelling in terms of not only the quality of the portfolio, the partners that you have, but the cash flow that's attributable to that portfolio to your shareholders. And so I think what's important to understand is that fourth point that I made earlier of the strategic partner that we have in Sandstorm. Sandstorm is Horizon's largest shareholder at 34%. They provided a lot of the financing to help us acquire some of these assets. And so when we acquired these assets, we helped financing them versus via a stream or precious metal royalty on those assets. So, Antamina, some of the silver that's attributable to our portion, we sell to Sandstorm. Some of the gold coming from Hot Maden goes to Sandstorm. And so, again, the cash flow projections that I've displayed in the earlier slides are net of those. But alongside of those, the financing is we acquired some debt from Sandstorm. These are 10-year debentures that helped us acquire some of these assets. Because a lot of people look at us and go, you're a junior company, but you have a world-class copper portfolio. How's that possible? Antamina is worth hundreds of millions of dollars. Hot Maden is worth hundreds. How are you able to acquire these assets? And so we were able to do that because we have this multi-billion-dollar enterprise company in Sandstorm helping us acquire these assets. And in return, what they're getting is a right of first refusal. So if we choose to sell a precious metal on those copper assets that we get, they have a right of first refusal on acquiring it if we so choose to sell it. And the beauty of copper is it comes generally with precious metal byproduct. And so the kind of financing and debt that they were able to provide to us was approximately $200 million. So you got an enterprise value of close to $250 million US. Your market cap is quite small at about $40 million. And that delta is essentially debt. And, when I've seen in the mining industry, debt can be kind of scary, and you have to be cognizant of, one, who holds that debt? What are the terms of that debt? What is the interest rate? What are the covenants associated with it? And so for us, it was really important that we structured and negotiated terms that would ensure that, our shareholders got all the benefits of leverage, but reduced a lot of the risk associated with the negative downsides associated with leverage. So one, that debt's held by a strategic partner. Two, that debt's not owed for neither, close to a decade out. The interest rates associated with that debt are quite low, negative yield. I think, half the debt is non-interest bearing until, our hot modern assets in commercial production. The other half that we took on as part of the Antamina transaction is at 3% fixed. And so when you kind of put all that debt together, today that debt is negative yield, and it's only a couple percentage points. And there's no financial covenants associated with that debt. And we have the ability to pay back that debt in shares, subject to, Sandstorm not owning more than 34% of us over time. And so it's really friendly, and it allows us to build out our portfolio and acquire a number of assets that we wouldn't have otherwise been able to get. So again, what does that leverage look like? Today, when you look at our leverage, it's quite high, 15 times your essential EBITDA. But again, that leverage based on our portfolio goes down over time. So if you assume and you go, hey, look, you're this unique copper company, you've got this awesome portfolio, and you've been able to acquire these assets on world-class assets, but what if you just don't do anything? What if you just use the cash flow coming in from your portfolio, you pay your attributable portion related to hot modern, assuming it's project finance via debt, and you just use that cash flow to pay off the debt? What does that look like over time? And so what you can see is over time, your leverage ratio declines because you've paid off that debt, and it's going down, and more. And so, when you look out into 2030 plus, that leverage ratio is significantly lower. And I think that's what I think is compelling about the story is the fact that you've got this enterprise value, and over time, equity holders end up owning more of the company. It's like paying off a mortgage in many respects. And so I think that's quite unique. And as a result, you can get some pretty outsized returns in that scenario if our thesis pans out, and if we're right about our assumptions, where all that value creation accretes to the equity holders. And so we've got a slide here. Because of that leverage, because of that debt, a 10% increase in your enterprise value, equates to about a 45 to 50% increase in equity accretion. So I think that's quite compelling. So to kind of summarize, I would say that we are unique in the sense that no one else is really going out there and acquiring kind of these minority positions, quasi-royalty assets, predominantly on copper in the space. You have a lot of copper companies out there who are either, couple billion plus, who are looking to buy majority positions and operate assets. We're not looking to do that right now. And then at the very other end of the spectrum, you've got kind of junior copper exploration stories where they may have one jurisdictional asset, and so you've got jurisdictional risk and you've got only one asset risk as well. We're unique because we're building out this portfolio. We're attaching ourselves to assets that you wouldn't get access to unless if you're looking for companies sub a few $1 billion in market cap. And so we're kind of in this spot where we're looking to buy these minority positions added to the portfolio. We currently have cash flowing asset today. Our Oyu Tolgoi interest, our second one, we believe is a function of time before it starts cash flowing. And our last asset, Hot Modern, is more of a long-term copper play for us. And so, I think it's a compelling story. You have to ask your question, do you believe in the quality assets? Do you believe in the operators running those assets? And then I think you can get comfortable with, making an investment. So those are the questions that are worthwhile asking. And so in terms of quality of team, myself, I'm CFO of a multi-billion-dollar company for a decade plus, won some recognition and awards. Our CFO was senior partner at PwC, chairman of Horizon Copper, is the CEO of Sandstorm Gold Royalties. He has been awarded many different awards in terms of national and international recognition. And combined together, we've done billions of dollars worth of deals in our careers. And we've, I think, a fantastic board with the background of having Sandstorm's technical team and corporate development team helping us move these assets forward. So really excited for what the story holds and what we plan on doing over the next few years. And so with that, I move into Q&A and answer some questions coming in from the audience. So one of the questions coming in says, should shareholders expect a cash flow of dividends in the future, or capital appreciation, or both? So I think the question is getting at is, do you believe that you'll be a yield company in the future? And the answer is yes, we do believe that we will. For the time being, we think that there's good opportunities out there, and so we're allocating our capital and building our cash position to about, right now we've got about $15 million US cash. And anything in excess of that, we're really just paying off debt with. So, right now we're just paying off those IOUs until we see some asset that comes in the portfolio that makes sense. So we're kind of in that growth phase. But when I, worked at that royalty company, that was the same type of story. It was building out portfolio, and it was building out this diversification and cash flow that was building up over time. And then over time, we were able to not only buy back shares, so one form of capital return to shareholders, but also pay back dividends to shareholders. So it does both now. And so that's the same kind of strategy. Build out that portfolio, get that maturity, get the diversification of many assets that are cash flowing, and then eventually become a yield company. So I wouldn't expect that in the next year or two, but more of a long-term strategy that I've been a part of it at another company as well. Another question coming in, what makes Horizon a unique investment? I think I've answered that in the sense that you can't find another story like this at sub 2 billion market cap that gives you access to this type of portfolio. And so I think there isn't really a company out there that's looking to acquire minority positions. So we're scouring the planet, looking for assets to put into the portfolio, and we're happy to get a 1% interest in some of the largest mines in the world. We're happy to get 20% interest in smaller mines as well, as long as the quality makes sense. We add to diversification of the portfolio and move it forward. One other question coming in is, are there certain areas of the world that you're investing or not investing in? And the answer is yes. We're looking at all over the world, but we're staying away from certain parts of Africa and Asia that we think that the political jurisdiction doesn't make sense for us. And so I don't think I have time to go through the rest of the questions, but feel free to reach out and ask and set up any meetings, and I'm happy to go into more depth and detail on it. It's been a real pleasure telling you the story about Horizon and who